What's up, stock compounders? Brad here. So today I want to talk about Liow and the idea he presented at the Sohn conference just a couple of days ago. First, I want to play a clip from a podcast that Yen was a part of called Equity Mates, where he kind of talked a little bit about this idea that he was going to be presenting at the Sohn conference. He didn't give the name, but he talked a little bit about what he sees in this business. And then after we watch this, we're going to look at a few summaries of what Yen actually presented at the Sohn conference. So let's take a look at this 2.5-minute clip from Equity Mates.
So Ren, you've already nailed it. So first of all, in general, we don't try to shoot for 12-month returns. Our preferred holding period is actually forever, right? So in general, our underwriting is 5 to 10 years, but our preferred holding period is optionality forever. And so to define a 12-month, really high-performing stock, and frankly, the pressure's even higher because I desperately want to come home to do this on stage with you guys next year. So the pressure's really heavy for me. But, so what's the catalyst and how does it drive? So, and I think Vineet said this really well. It's like for the short term, like north 100% return, you need a change. You need a re-rating. You need multiple to be a kicker. And so there's a couple of different ways I can tell you guys just generically how to do this, but how we do it specifically is one version. We call them coilers. So coiling, when you uncoil it, is how you create 100% return in a 12-month period. And that's multiple and earnings power combined creates that outcome. And so what triggers that re-rating? So one of the things for us, the re-ratings are caused by either changes in perception of the quality of an asset or changes in perception of stage of a cycle. And so the stock that we're going to pitch is a classic, like really long-dated monopoly. And that has been severely impacted by COVID. But we believe the long-term trend is 30 years of history and human nature, which we firmly do not believe COVID changed. And like the Aussies are going to unleash when this catalyst hits. And that's the wave we're riding. So we're talking about a multiple re-rating back or through historical bounds because we believe the ricochet is huge. We believe the earnings coiling is playing a 30-year trend that we just believe, frankly, is categorically unchanged. In fact, there'll be an echo boom on the other side of it. And you put the two together, and it's going to happen sometime in the next, like we do believe firmly it's in the next 12 months. A lot of that value will uncoil in that first 12 months. But yeah, we'll make great money in the next year. But my God, we'll make even more in year 3, 4, 5, 6 on this thing. And so we're coming hard, and we can't wait to pitch. And it would make it. Nothing would make us happier than HM1 absolutely destroying it on the back of one of our picks. So we're rooting hard for it.
He is a powerful speaker. Echo boom, you get this uncoiling, right? It's just pretty powerful stuff. So that was Yen talking about this position that he revealed at the Sohn conference, which of course is GitLab, okay? So the cool thing about Sohn conference, if you go to sohnheartsandminds.com.au, there's a media tab. And there's actually a lot of great stuff in there, kind of breaking down what presenters pitched on and things like that. There's actually 4 different articles under this media tab for Yen Liow. So I'm going to kind of touch on 2 of them. One of them is actually that podcast that we just caught a clip of. But let's get into what is GitLab. GitLab is a founder-led software business that is focused on DevOps, which is rapidly growing into a large market with pricing power that is expected to last for decades. Liow stumbled upon the company while researching Atlassian, which is an Australian software company which itself generated 20 times the return on capital since its IPO. So what I was able to gather from Atlassian, the stock was about a 13 bagger since it's been public for like 6 years. So 13 bagger in 6 years, that is phenomenal. We kept on hearing from our conversation with our developers in the community that this company has fantastic software which they believe will become one of the emergent standards for years to come. Imagine getting into Atlassian at the start of the ride. We believe that company is GitLab. The 15 billion company listed on the NASDAQ, blah, blah, blah. Its focus is on source code management within the so-called DevOps stack, where a duopoly exists with Microsoft's GitHub and now GitLab. Where Atlassian has created a 100 billion business focus on one core focus in the DevOps stack, GitLab is focused on the entire cycle with leadership in almost 3 segments. There is no single platform that allows developers to go through this entire process without using different sources of software. GitLab is uniquely positioned to solve that problem. They are investing aggressively throughout the entire DevOps cycle. Some 90% of the business is subscription-based, 88% gross margins, 97% gross revenue retention. We believe GitLab has an opportunity to grow almost tenfold in the coming decade. Software developers are among the most valuable employees in the world. This is something Pabrai talked about recently as he broke down the business model for Tencent. And they will be an extremely valuable place to sell software into. So that's sort of a quick synopsis of Yen's talk. There's a few other points I wanted to hit from this other article from Richard Henderson. A lot of the same things. Let's see. Okay, so here, this is what he mentioned also in the podcast. He likens the stock pick to investing in Atlassian early in its development 2 decades ago and says GitLab will also benefit from a re-rating of its multiple, which trades at 23 times forecasted 2023 earnings. So that's, part of what Yen is seeing in this business is that re-rating in the multiple, in addition to that earnings power growth over the next, handful of years, moving on, hopefully for a very long time. So we believe the DevOps market is one of the best markets within software. Atlassian has created a $100 billion business focused on one core part of the DevOps stack, the plan phase. GitLab focuses on all parts with leadership in 2 and is highly competitive in a 3rd. So, that should give you a good kind of starting point to dive into GitLab if you guys are interested in researching this particular investment opportunity. There's some tangible things there to really develop some questions around and go forth seeking answers to those questions. The last piece I wanted to mention, so in Cliff Sohn on Twitter recently did a Q&A, an Ask Me Anything session, and he was asked if you couldn't read a company's 10Ks or 10Qs, how would you go about learning about the company and trying to get a sense for, is this a good investment or not? And Cliff Sohn replied, well, I would watch their investor presentation, okay, because it should all be in there in terms of what the management sees as the bull case for the business, right? The second thing was talk to past employees, and that really got me. That really resonated. Talking to past employees to really get a sense for what is the DNA of the business, what is it like to work there. There's just so much you can glean from past employees of a business. Current employees probably be a lot more hesitant to kind of talk freely about a business, but past employees probably wouldn't have that same reservation. So LinkedIn is obviously a phenomenal place to try to figure out who are the past employees. And I was poking around a little bit. I found the CEO of GitLab on LinkedIn. I'm a second-degree connection to him. Unfortunately, right in the title there, he says, I'm not able to respond to LinkedIn messages. It's okay. I probably wasn't going to reach out to him anyway. But let's just try to get a sense here for, how many employees, past employees, and how easy that is to search for. So if we look at people, connections, current company, okay. Let's look at all filters. Current company, past company, GitLab, that's what I want. Bruce works at Coastal Ventures, okay. So, you can see past VP of product at GitLab, past manager, global account-based strategy. So it's really useful how LinkedIn displays this information. It knows I'm looking for past employees of LinkedIn. So right there, it shows me what did they do when they worked at GitLab. And then where are they working now? It's just a ton of useful information. So I actually do have quite a few second-degree connections to past employees at GitLab. And it's fairly easy on LinkedIn to reach out to second-degree connections. You just request to connect, and then you can write a little note. So, maybe I'll do that. Maybe I'll reach out to a few of these past employees and try to get a better handle on the business that way. So that's just a tip I picked up from Cliff Sohn recently. But yeah, there's a lot of good stuff here. Obviously, Yen is very excited about this particular opportunity. I don't actually know if Aravt Global is invested in GitLab. That'd be, I guess, odd if they weren't, considering how bullish he seems on the company. Let's see if I can get a sense of that. Aravt Global is tracked in ticker terminal. Aravt Global right there. So the only companies we have in ticker for Aravt Global are U.S. companies. They're only via 13F filings. But I don't know why I'm saying that. GitLab is a U.S. based company. I'm pretty sure. Let me just double check that. I know they're listed on NASDAQ, but where are they headquartered? Yeah, San Francisco. So it should show up, assuming Yen bought it in the third quarter, so prior to October 1st. It's possible that he's bought it in October or November, and then we wouldn't see it in ticker or on his 13F filings until the middle of February, when the next round of 13Fs come out. So I'll definitely be paying attention to that. It'll be interesting to see if he did buy it, how high conviction of a position is it for his fund. But anyway, guys, that's really what I wanted to share today. I highly recommend go to Sohn, heartsandmind.com.au. Check out this media tab. There's just a lot of good stuff on here. This just gives you the sense of the format. A bunch of write-ups from pitches at the latest Sohn conference. What Charlie Munger taught me over breakfast about investing. So there's some other stuff thrown in here as well. So I plan on spending some time with this resource in the coming days. So check it out. With that, thanks for watching, guys. I will see you all in the next video. Take care.